In today's video, we'll delve into the recent major incident involving CrowdStrike and its impact on the market, as well as a detailed analysis of CrowdStrike's current and future potential as an investment. But first, here's an intriguing fact. Did you know that CrowdStrike's innovative security platform is trusted by some of the largest companies in the world, and its customer satisfaction rate is through the roof? Stick around until the end of the video, and we'll reveal a special tip on how to leverage cybersecurity stocks to boost your portfolio returns. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. A recent fault in CrowdStrike's Falcon security software triggered a widespread outage in Microsoft's cloud services on Friday, July 19, 2024, causing significant disruptions across various sectors, including airlines, banks, and many other businesses worldwide. The incident not only affected operations but also sent shockwaves through the financial markets. CrowdStrike's stock took a severe hit, plummeting by 18% in pre-market trading. Microsoft, another major player, saw its share price drop by over 2%. This event underscores the interconnectedness of tech companies and the ripple effects a single software update can cause. This incident also highlights the vulnerabilities that can arise from software dependencies and the importance of rigorous testing before rolling out updates. CrowdStrike Holdings Incorporation, ticker CRWD, known for providing advanced cybersecurity solutions aimed at preventing breaches, found itself at the center of this incident. The company offers a wide range of services, including cloud-delivered protection for endpoints, cloud workloads, identity, and data. They also provide threat intelligence, managed security services, IT operations management, threat hunting, zero-trust identity protection, and log management. Founded in 2011 by George P. Kurtz, Greg Marston, and Dmitry Alperovich, CrowdStrike is headquartered in Austin, Texas, and serves customers globally. Over the years, CrowdStrike has built a reputation for being a reliable partner in cybersecurity, helping organizations of all sizes protect their digital assets. But before we proceed, here's a question. How many tech companies in your portfolio are directly affected by their partners' software updates? Keep that in mind as we dive deeper. Financially, CrowdStrike is an interesting case. The company's current price-to-earnings (PE) ratio stands at a staggering 968.09. Including extraordinary items, the PE ratio is 674.43, and excluding them, it's 797.87. They also have a price-to-sales ratio of 23.32, a price-to-book ratio of 30.71, a price-to-cash flow ratio of 61.11, an enterprise value-to EBITDA of 538.46, and an enterprise value-to-sales ratio of 25.49. Notably, their total debt-to-enterprise value is remarkably low at just 0.01. These figures suggest that while CrowdStrike is highly valued by the market, it also operates with a strong financial foundation and minimal debt, which is always a positive sign for long-term investors. On the operational side, CrowdStrike generates significant revenue per employee at $385,559, with an income per employee of $11,272. The company's receivables turnover is 4.13, and its total asset turnover is 0.52. As of July 19, 2024, CrowdStrike has a market capitalization of $86.38 billion and 230.88 million shares outstanding. These operational metrics indicate a highly efficient company that maximizes its resources to generate substantial income and maintain a robust cash flow. Despite the recent setback, CrowdStrike has had a phenomenal year so far. The company's stock surged approximately 40% year-to-date before the incident. Just a few days before the outage, CrowdStrike's stock reached an all-time high of $386.68 per share, marking an impressive 118% increase over the past 12 months. This meteoric rise can be attributed to several factors, including the introduction of innovative products, strong customer loyalty, and the growing cybersecurity market. With cyber threats on the rise, the demand for robust security solutions is escalating. Statista projects global cybercrime costs to soar from $9 trillion this year to over $15 trillion by 2029, making investments in cybersecurity increasingly essential. This growth trajectory suggests that companies like CrowdStrike are well-positioned to benefit from the increasing emphasis on cybersecurity. While the recent IT incident is a stark reminder of the challenges even industry leaders face, CrowdStrike's long-term prospects remain promising given the escalating cyber threat environment. Now let's delve into the specifics of why investors might consider or reconsider their positions in CrowdStrike. CrowdStrike recently reported outstanding financial results for its first quarter, exceeding both earnings and revenue estimates. The company posted adjusted earnings per share of 93 cents, surpassing analyst expectations by 4.49%. This marks a significant increase from 57 cents per share in the previous year. Revenue also outperformed projections, reaching $921.04 million million, showcasing substantial year-over-year growth. These consistent results highlight CrowdStrike's robust financial performance. The company's ability to continually beat market expectations is a testament to its solid business model and effective management. However, the market's reaction to these results will largely depend on the company's guidance for the rest of the year. Investors are keenly observing the company's outlook on future earnings and revenue, as well as any commentary on the competitive environment and business trends. While the latest quarter's results are undeniably positive, the sustainability of the stock's upward momentum will hinge on CrowdStrike's ability to maintain its growth trajectory and deliver on future promises. Investors will be watching closely to see if CrowdStrike can continue to innovate and stay ahead of the competition. Looking ahead, CrowdStrike is well positioned to capitalize on the burgeoning cybersecurity market. The company's management is optimistic about the future, projecting a 125% growth in the market opportunity for its AI-native security platform by 2028, reaching a staggering $225 billion. As customers increasingly adopt additional CrowdStrike modules, analysts expect the company's revenue and free cash flow to continue their upward trajectory. With only 28% of customers currently utilizing 7 or more modules, there's significant untapped potential for growth. This suggests that CrowdStrike has a vast market to capture, which could drive substantial future growth. However, the promising prospects have also translated into a premium valuation for CrowdStrike. The stock is currently trading at nearly 100 times its free cash flow. This steep price tag raises concerns among value investors, especially when compared to tech giants like Microsoft, Apple, and Palo Alto Networks, which command significantly lower valuations. While CrowdStrike's growth potential is significant, investors must weigh this against the high valuation and the inherent risks in the cybersecurity industry. High valuations can often lead to volatility, so it's essential to consider whether the stock's price justifies its growth potential. When we look at the pros of investing in CrowdStrike, there are several standout points. First, the company holds a strong market position in the ever-growing cybersecurity sector. This market is only expected to expand further in the coming years. Additionally, CrowdStrike's innovative product portfolio ensures that it remains ahead of competitors by constantly introducing new and improved services. Financially, CrowdStrike has shown consistent performance by regularly exceeding earnings and revenue expectations, which speaks volumes about its robustness. Furthermore, the company's strong customer loyalty, indicated by the increasing adoption of additional modules by existing clients, reinforces its market strength and growth potential. On the negative side, there are some cons to consider as well. The high valuation of CrowdStrike stock might be a deterrent for value investors. It's trading at nearly 100 times its free cash flow, which can be a risk if the company doesn't continue to meet its growth expectations. The cybersecurity industry itself is highly competitive and constantly evolving, posing a challenge to maintaining market leadership. Moreover, the recent software update incident that led to widespread outages might impact investor confidence in the short term, despite the company's overall promising outlook. Despite these challenges, CrowdStrike's long-term growth potential and market leadership in the cybersecurity space make it a compelling investment for those willing to navigate the risks. Now let's take a look at the table. CrowdStrike's financial metrics paint a picture of a company performing exceptionally well. The current price-to-earnings ratio of 968.09 highlights strong market confidence, while the price-to-sales ratio of 23.32 and the price-to-cash flow ratio of 61.11 underscore the company's significant revenue generation and cash flow efficiency. Operationally, CrowdStrike is impressive, generating substantial revenue per employee at $385,559 and maintaining an income per employee of $11,272. Their receivables turnover is 4.13, and total asset turnover stands at 0.52, indicating efficient use of resources. Additionally, the company boasts minimal debt, with a total debt-to-enterprise value of just 0.01, showcasing robust financial health. Despite the recent setback caused by the software outage, CrowdStrike's stock has surged approximately 40% year-to-date, reaching an all-time high of $386.68, marking an impressive 118% increase over the past 12 months. This surge is driven by innovative products, strong customer loyalty, and the growing demand for cybersecurity solutions. The company's latest quarterly results also reflect this strength, with adjusted earnings per share of 93 cents and revenue of $921.04 million, both exceeding market expectations. Looking ahead, CrowdStrike is well positioned to capitalize on the growing cybersecurity market, with management projecting a 125% growth in market opportunity for their AI-native security platform by 2028, reaching $225 billion. However, the high valuation, trading at nearly 100 times free cash flow, and the intense competition in the cybersecurity industry pose significant challenges. Investors need to weigh these factors carefully when considering CrowdStrike as a long-term investment. To conclude, while the recent outage involving CrowdStrike CrowdStrike's Falcon security software had significant immediate impacts on the market and operations globally. The company's overall trajectory remains promising. As cyber threats continue to escalate, the need for advanced cybersecurity solutions will only grow. CrowdStrike's innovative products, strong financial performance, and strategic market positioning make it a key player in this critical industry. And as promised, here's a special tip. Diversifying your portfolio with top-performing cybersecurity stocks like CrowdStrike can provide a hedge against the increasing threat of cyber attacks, potentially boosting your overall portfolio returns. Now, before we wrap up, here's a question for you. Which sector do you think will have the most significant impact on the stock market in the next 5 years? Let us know in the comments below. If you found this video informative, please give it a like and subscribe to our channel for more valuable content. Remember, this video is for informational purposes only and is not financial advice. Always do your own research before making any investment decisions. Thank you for watching, and we'll see you in the next video.